months to end December, and it's, well, I suppose your share price was telling us this, Eric. In beginning of 2007, 4 Rand a share, you're down at 1 Rand 80 at the moment. So it is a reflection of tough times.
Absolutely. We unfortunately started the year with an oil price of around $145 a barrel, and by December it was down to about 60, so a massive drop. And that allowed us to catch up to some extent in terms of the profits that we were hoping to achieve for the half year, but not fully to the point that we could match last year's profits.
And the market's shrinking as well.
The market shrunk by about 5%. Obviously, with the fares increasing on average by about 26%, the market was expected to shrink. It shrunk a lot less than what we anticipated. I think the hit of the oil price on all modes of transport facilitated keeping the airline industry slightly boosted, rather than having a cost which affected only the airline industry and allowed people to migrate to other forms of transport again.
I don't know if I'm flying on the particularly well-booked flights, but I did quite a lot of travelling around the country last week on British Airways as part of Comair, and just about every flight there was not a seat to be taken. So have things turned up for you guys, or are you just putting less flights up?
We have been managing capacity fairly carefully.
Is that what you call it, when you squeeze people into these little seats?
We try and keep making money, No, we didn't pull out too much. We came out at about 2% less capacity, but the market has held up remarkably well, and we're actually a little bit nervous because we are expecting the global economic downturn to hit South Africa at some point. We're not going to escape it. And I think last time when there was an upturn, we were sort of 3-4 months behind. We got a downturn now. We're just wondering when it's going to hit us. But I'm sure it's coming. And to date, our loads have been good. Keep in mind also that the market has shrunk by about 5%, but at the same time, Nationwide went out of the market in May last year, which took out about 7% capacity. So we have been fortunate that our average loads have remained stable. But yeah, going forward, we expect that sooner or later the global economic condition has to impact on the travel market in South Africa.
Is this due to less tourists?
Less tourists, although we're already seeing the impact of less tourists, and despite of that, the international travel is down by around 20%. But despite that, our aircraft are still relatively full. So I don't think that's going to be sort of the next phase. The next phase is going to be when the domestic market starts holding back on travel, when the pinch really hits the consumer. And everyone seems to still be continuing as if it's still Christmas time here. So we do have
How big a decline could you anticipate?
I think we're sitting at the moment on the 6 months that we're reporting on with a 5% decline. In theory, we should probably see at least 15% further, considering where the prices have gone. But I think the reality is that we do have a lot of projects going on in South Africa at the moment, construction projects. We have lead up to the World Cup. We have the Lions Tours. We have Casafa Cup, etc., and all these various events are keeping the volumes up to some extent. So realistically, we maybe see a 10% decline in the following 6 months.
Eric, your headline earnings per share down from 15 cents in the same period a year before to 8 cents this time round, so it's nearly halved. Are you expecting that you'll have a similar financial performance in the second half, given the outlook that you've just painted?
Well, I guess the question is just when it's going to happen, when this drop-off is going to happen, and to what extent it will happen. And at the same time, to what extent airfares are going to retract back to historic levels. Keep in mind that last year was the first year since 2001 that the average domestic airfare has exceeded the 2001 average domestic airfare, which is quite remarkable. Obviously, it's been the result of all the low-cost carriers coming into the market. But the average revenue per passenger last year with a 26% fare increase was the first time it exceeded 2001.
Your competitor, South African Airways, and Mango, its Mango brand, and I guess in the budget this year, and we have spoken about this, the taxpayers putting another 1.6 billion rand into South African Airways. Do you have any indication on when this might end?
It won't end, I don't think. I think as far as we can see, the results for the coming year are going to be fairly shocking. Combination of bad hedging and poor operating results. International passenger volume is down dramatically. Fairly odd pricing in the domestic market. SAA undercutting Mango on pricing at some stages. So we do expect that they're going to produce a fairly phenomenal loss this year. and the money's going to have to come from somewhere, otherwise they run out of cash.
But from your perspective, it's tough to be fighting against a competitor that is being bailed out. You've done some interesting things, though, moving into online travel in quite a big way.
Yes, we saw the opportunity there just looking at how the international trends of online purchasing have moved to South Africa. And Kalula at this stage is still the largest online retailer in South Africa with airline tickets. And we've seen that about 40% of hotel rooms are booked online in Europe and the States. Now in South Africa it's still less than 1%. So looking at hotel rooms, looking at car hire, looking at flexible packages, etc., there clearly is a global trend to move online with those kind of products. And with the fees increasing at travel agents, and especially now in an economic downturn situation, people are looking to save money and not pay for service fees, rather get the product at source.
But isn't there a conflict in some way, conflict of interest there? You're running an airline and you're also running a travel agency?
Well, we're running a travel agency with non-competing products. That's the trick, I guess. And that is, that's where we're hoping to diversify a bit away from.
How do you run a travel agency with non-competing products in the airline business?
Well, we're not competing with our own airline, if you put it that way. We're not selling SA and Mango at one time on our site. No, no. Well, not yet, anyway.
A bit like Hippo,
the
the insurance guys who actually only sell their company's products and nobody else's products as well.